What looked like it's going to be a one-off move only stemmed into further losses for our markets today. So while we did start off on a weak set of global cues, we did have a soft start, and from there things only got worse for our markets. We managed to close at session lows, irrespective of the fact that European markets, or for that matter even Dow Futures, though they started off with a 200-point gain, eased off from there. On closing bell, we were still holding good by about 138 odd points in the Dow Futures. Given that as well, we managed to close at the session lows for ourselves. So closing in with a print of 122 points lower on the Nifty Futures, 15,630 is where the Nifty Futures finally settled in for the day. It was equally dismal when it came to the end, to the broader health of the market as well, with 135 F&O names standing to the declines, and only 28 odd made King 8 to the list of winners. Quite a few factors which are currently at play. A, that it's a synchronized fall that one has seen in risky assets, which is clearly making market participants pretty nervous. Remember, it's not just equity markets, but global commodities as well, which have seen a fair amount of weakness of late, be it the 6% slide that you've seen in oil, or for that matter what's happening with metal commodities like copper as well. Also, global growth fears have really come to the fore with the spike that one is seeing in the Delta variant cases across the globe, and that's also sort of putting a big question mark on what could be the potential impact of the Delta variant surge across the globe on the economic recovery as well. Data points from China as well as the commentary is hinting towards a slowdown, so that's also making the markets a little bit nervous here. There have also been major floods that we've seen in Europe, which are also going to be impacting the growth in that particular region. Global growth estimates may be cut in the near term. That is what the markets are fearing. Assets have already started pricing in a full-blown economic recovery. That could get a little bit challenged. Also remember, we have had a one-way move up from the March 2020 lows across asset classes and across global markets. So the markets are somewhat also falling under their own weight, and a little bit skim from the top is par for the course pretty much. Global risky assets in some parts had become frothy in valuations as well. So a little bit of correction from the top is something that cannot be ruled out completely. For the day, of course, it's been banks, it's been metals, the high beta global linked sectors which have taken the maximum brunt. Having said that, what held out today was also some of the earnings reactions. The day started off with ACC, which has been a beat in all counts. Beat the volumes, or for that matter even the realizations, that rubbed off on the rest of the cement pack. So be it an ACC and Ambuja, Ultratech Cement is due to report its numbers come Thursday. That also held out. Also Asian Paints, a big thumbs up this earnings season, managed to beat all expectations. A stupendous quarter for them, rubbed off on Berger Paints as well. But within the broader markets, you've had Interglobe Aviation, Aditya Birla Fashions, Indian Hotels, Piramal Enterprises, Nalco, SAIL. The entire reopen trade as well came off, and that's pretty evident from the fears which are prevalent across the globe right now.